So it all comes back to what are we trying to do as traders? And I'll tell you, our job, our number one goal is to identify when there's an imbalance in value and exploit that imbalance for a high probability trading opportunity. Price is the key driver. We believe price is king over at Newbie-Trader.com, and all of our analysis we do, and I run a live trading room over at our sister site, and I'll tell you more about that at eminijunkie.com. But a lot of our work that we do in the morning is all around market structure, volume profiling, value area analysis, and setting up a plan or a roadmap for how we think the day is going to unfold. And then after we have that plan and roadmap for the day, then we have these various entry techniques that are more tactical in nature for actually getting on a trade, getting in the plan, and managing that trade. But it has to start out with understanding that it's really about understanding where is there an imbalance and where are these high probability opportunities going to expose themselves throughout the day. The clearest way to observe movement is to remove time from the charting process and focus purely on price action. Developing a system around price action movement will help eliminate costly trading mistakes associated with indicator error derived from time-based charting. The Ultimate Fractal Swing Tool, which is our flagship product over at Newbie Trader, is a pure price action-based trading methodology. So before I get into this tool, I need you to understand about some of the elements that go into the tool. And over at Newbie Trader, if any of you have been there yet, if not, I would invite you to go over there. A lot of you on this presentation tonight are from my E-mini Junkie list. I'll invite you to come over to Newbie-Trader.com and sign up for our free Renko candle. And I'll also give you a little gap trade white paper for signing up. But this candle is just something that I needed to have developed when I started working with our programmers, and I decided that this candle would be something that would be nice for everybody to have access to. It's the part of our system that is required, and it's just a better way to look at the market. It's a pure price-based candle. It's based off of a Renko candle, but it's been modified. And what I do, I modify it in such a way that I allow you to see where a wick would form, and I offset the open. I offset it to midpoint of the previous brick. When you talk about a typical Renko, they'll show it as a value from low to high, and they call them bricks. And for the ES, we use a 4-tick brick. So on a typical Renko, you would have a block or a brick that's 4 ticks wide, and then you'd get your next block or 4 ticks above it, and then your next 4, next 4, next 4. But on rotations with a typical Renko candle, you don't see that rotation candle, because unless it trades through that high, there is no brick. So you could actually trade up, say 4 ticks, and then trade down 4 more ticks before you see your next brick. Well, that didn't do a whole lot for me, so we did this little offset, and we put our open mid-brick, and so basically we are now getting a new brick every 2 ticks, because we're requiring it to move 4 ticks in the direction of a trend, and we'll show you an example here in a minute. But we expect the market to move 4 ticks total, and if we're offsetting to the midpoint of the body of the previous brick, you're really saying new candle every 2 ticks, or every new brick every 2 ticks. On a reversal, it's actually 3 times as much, because it could go up 2 and then has to come down 4 and then another 2 to the real open. So it'd be a 6 ticks on a reversal brick. And on the crude oil and gold and some of these other markets that are a little more volatile, we use a 6-tick body. And in a 6-ticks body, half that brick, or 3 ticks, would be a new brick every time the market was trending, and 9 ticks on a reversal. And it'll make more sense here when you actually see the charts. So what we do by using this type of charting mechanism, we remove time from the equation altogether. We do not care how long it takes. We just care about when there's pure movement, because movement in price is really all we are trading. We are not trading time, we are trading price action. So here I'm going to have you take a look at a couple of charts. Real quick survey. You have a chart on the left, that is our NTRenko chart, and you have a chart on the right which would be a typical 10-minute traditional candlestick. Please type in your screen L, R, O, R, left or right. Which chart is more appealing to the eye, easier to see the swings? I will tell you this is looking at the same data, the same price action, and the left side, the L, is the Renko, the right side is time. They're showing you the exact same information from a time perspective, but I would say that the chart on the left, and it looks like a lot of you agree with me, the chart on the left is easier to identify from a swing standpoint. And that's the whole point. So here are my Renko candles offset, and let's just take a look at them. If we just kind of focus here on the left, you see how you have like a green bar, and then halfway up that bar you have the open and another bar, and it kind of offsets. When you see a wick come down, that means the price action actually started to push downward, but it ultimately closed higher. So when you see these higher, you're only getting higher once it closes to that area. Remember I said for it to reverse it would have to come down 6 ticks. And that's what happened up here at this upper pivot point. You see the market pushed higher, and it pushed up a couple of ticks, but ultimately came back down 2 ticks plus 4, and so you get a reversal. So on these reversals, you'll see these real nice candlestick wicks on the reversals. So it just lends itself to a real nice, clean, crisp pattern. So the next thing we need to talk about is fractals. And this is a term that some of you may have heard before, and I need to explain what an NTFractal or a newbie trader fractal is, how we define it, how we use it, and how it goes into our tool. Now, the fractals are basically these horizontal red and green lines you see on your chart. If you start in the bottom left, we have a solid, thick line, and we call that a green, our bullish, active fractal. You can see about halfway over this line where my cursor is right now, the line goes from being thick to being thin. The reason it goes from thick to thin at this point is because the fractals are still long, but this next higher line takes over as being the active swing point. And then as it moves up, you see this next active one and next active one. What causes these lines to shift to be the next active fractal in the series is we actually break through a high. So the market's going higher, higher, higher. You get a slight pullback, and it breaks through that pullback. When it breaks through, that becomes the active fractal. Pushes higher, it pulls back, that swing low point. When it breaks through that swing low point, that becomes the active fractal. So the reason I call it fractal is because it truly is fractal in nature. And what I mean by that, if any of you are familiar with Fibonacci retracements or Fibonacci extensions, you know you could put Fibonacci retracements on annual charts, monthly charts, weekly charts, daily charts, 15-minute charts, all the way down to, tick-based charts. And you see that the market still reacts at those key Fibonacci levels, the 50% line, the 61%, et cetera, et cetera. That is because, by design, Fibonacci's ratios are fractal. They work across multiple time frames. Well, our tool is fractal in nature as well. And the swing high, swing low concept that I refer to here is based in Dow theory. It goes back to the Great Depression, and it's just a measurement of, swing highs and swing lows, higher lows in an uptrend, lower highs, lower lows in a downtrend. And no matter what brick or value that you put on your Renko or NTRenko candle, this pattern shows itself. So you can be looking at large swings, are small swings, and you still get this phenomenon of swing high, swing low, and you can track trend based on that. So our NTFractal, it's basically the swing high and swing low markings created after a valid pullback and a new high, new low combination that meets specific parameters. Now, we don't have time tonight to go into all of the rule sets around when the rotation occurs and when does the fractal go from being green to red and red to green. Just know that the tool keeps track of it. I explain it in great detail in our educational area and members area and that. But it basically, think of it as this. As simple as we'll keep it is, when you get a pullback, that very bottom of that pullback is that candle that has that wick. The very next candle we call that next to that pullback candle, we call this like our PB, our P candle, the pullback candle. The very next one is what we call our signal candle. When that very next candle, signal candle, closes at or above a fractal, a red fractal when going long, or if it comes down and closes below the green active fractal when going short, that's when your fractals rotate. So when the market started falling here, see how it bounced? And here would have been your P candle, and this very next one would have been your S candle, your signal candle. Well, that signal candle is below the most recent green active fractal, and this little rotation here caused these lines to go red, and then we just went back and marked the swing point that was prior to the one that actually rotated. So this top red line is a default that happened after this rotation that took place right here, and that caused the fractals to go red. And then you had the pullback and the push higher. It's not here that the rotation occurred, but up here when we got the pullback and the rotation, this pullback rotation combination here made the fractal turn green, and we just went and marked the swing low point prior. But all you need to know as a student, and all you need to know as a fractal user, is green is bullish, red is bearish. You like to trade in the direction of either green or red, and these colors can be adjusted. I know there is a small percentage of the population that has red-green color blindness, but you can adjust these, and basically you want to concentrate on taking long trades when it's green and short trades when it's red. That is for our conservative and our aggressive entries. So we identify trend, one of the ways, by these red and green lines that we call active fractals. Another way we identify trend, and this is nothing new, is what we call an NT moving average cloud. And we have a specific moving average that we look on these Renko candles. But you see, we just have a fast moving average and a slow moving average crossover. And we color in the space between them red or green. And same thing, when it's green, we have what we consider a trend moving up. And when it's red, we have a trend moving down. It's nothing more than a simple moving average crossover system. And we identify, for our purposes, as this trend direction being an intermediate term trend. So we talked about the fractals being a trend identifier. Here is another way we identify trend, just a moving average crossover. And we know that moving average crossovers are lagging indicators, and we accept that. But our belief is at Newbie-Trader that the best short-term trend trades, are taken in the direction of the intermediate term trend. So that being said, if our intermediate term trend is green, we would take a guess, and go ahead and answer this for me. If our intermediate term trend is green, what direction on a short-term trade basis would be our best short-term trade, long or short? It's not a trick question. I'm just making sure we're still awake here. Right, long. So we want to trade long when they're green and short when they're red. Okay, you're getting it. You've understood red and green lines from a fractal standpoint, and you've understood red and green crossovers from an intermediate term trend standpoint. Now, this one's going to be a little bit involved. It's very, very basic, but there's a lot going on, and I need you to understand the power of what's going on. And that's what we call our NTUltimate candle. Now, this is just a simple red, dark red, yellow, green, and dark green candle color, but it's very, very, very important, because what we do is we look at each market. And this candle is specific and custom to each market, and there's a lot of programming that goes into it. But we look at each market. How many here trade the ES or have aspirations of trading the ES, the S&P E-mini? Okay, does anybody trade anything other than the ES? If you trade anything other than the ES, just type in a symbol that you trade. NASDAQ. Okay, we got crude and gold. Crude, the Dow, gold, crude. Okay. No Russell traders, huh? I figured we'd have a few TF folks. No Russell? Okay, well, if you trade, okay, Rick trades Russell. If you trade gold and you trade the ES, or if you trade crude in the ES, or the Russell in the ES, or the NASDAQ, right? You know that the ES is very different from the NASDAQ and very different from gold, very different from the crude, right? I mean, they act completely different. And some of that has to do with how thick or thin the markets are, how much volume's traded there. There's all the big boys and all the institutions. They're all in the ES, so there's all kinds of gamesmanship that goes on. But would you agree that the markets are very different? Is trading the ES very different from trading crude or gold or NASDAQ? Les says no. Okay, I would say they are. They're very much different. It doesn't mean you can't use the same system to trade them, but their heartbeat is different. They beat to a different drum. I would say they are very much different. And we've done a lot of stuff behind the scenes to take care of that. We do a lot of programming, and it comes out in our ultimate candle, in the colors of these candles, because we identify the market direction and strength by market. So our algorithms are looking at each market independently, and it identifies the strength and the direction of the movement, and it's evaluating the markets in multiple dimensions and time frames. Now, go back to what I talked about earlier in this presentation. I said price is king. It is king, but you can still evaluate markets on time-based charts. You can still, you can obviously evaluate on price-based charts and volume-based charts. Well, what we do all of that. We use multiple time frames. We use multiple size price bars and volume looks. And we're looking in all these different directions at all these different markets, and we're evaluating the strength, and we come up with a color-coded system, and we compare and contrast all that information real time to the actual buying and selling pressure that's happening at a specific point in price and time. So what do I mean by buying and selling pressure? How many people out here have heard of some of these charting companies out there? One of them is called Market Delta. They have their whole own charting platform that's all around volume analysis in the marketplace. Delta footprints, things like that. These are some of their trade names. Yeah, that's what they're doing. They're identifying the bid-ask pressure by price at a specific point in time, and they're looking at the battle. Some other companies out there are Rancho Dinero. It's a plug-in for NinjaTrader. There's another company out of Europe, but we do the same thing. We take that same type of analysis, that look, because we want to see the footprints that the big boys and the institutions are making. Well, part of that analysis goes into these candle colors. Believe it or not, we have a whole tool around that type of analysis, but part of that goes into some of our algorithms that we look at on the market. So although this looks like a very simplistic short-term indicator, it's really quite complex, because we're looking at multiple time frames, multiple price levels, range-based charts, time-based charts, and we're doing it all, comparing all these things, and then putting it into one little two-tick candlestick. It's very, very impressive to take all that information. It's more than you could track on your own. We put it into this one little, this candle color. So we compile it and we put it in the candlestick, and the output color is from dark green to dark red. Dark green being one end of the spectrum where you're mostly bullish, dark red being mostly bearish, and the spectrum goes from dark red to yellow to green to dark green. Not only is that good information to know when you're in a trending environment, down here in the bottom left you go from dark red and it transitions through yellows to greens and ends up dark green at the top. But it also can benefit you when you're in a range environment, because if you have an edge that you're trying to trade, let's just assume that we have an edge up here at the 1753.50 area where this top of this candlestick is, where my cursor is. Let's assume that that was a big resistance level that we wanted to trade off it, and we were in a ranged-based day. Does that tell you something when it goes from dark green to green? Some people would say, well yeah, it's still bullish. Yeah, but it's less bullish, right? It's starting to show that there's a transition taking place. Has nothing to do with the price action at the point. These candles aren't colored on the price action close of that specific point. It does when you look at multiple time frames and you pull it all together, but it can show you an edge rotation level as well. So it's not just for trend trading, it can show you edge rotation as well. So very proud of these, what we call our NTUltimate candle. It's probably the most important indicator we have that goes into this tool. That in conjunction with the next thing we're going to talk about, and I already alluded to it, and that is what we call our DeltaCross. Again, the same type of information that these big companies out there that have their own platforms and charge you thousands of dollars to use, we've taken that same bid-ask pressure information and put it into an indicator. Now this indicator shows up on the bottom of your screen here, and first I'm going to talk about the delta lines, and that's the actual lines that you see there that look like a moving average crossover system, and it's kind of what it is. But this delta cross, these lines, it kind of looks like a stochastic, does it not? And you can kind of trade it like a stochastic. But the first line I want to kind of pull your attention to is this real skinny little orange line that you can see. It's all jaggedy. That is the actual delta. Okay, so these companies out there, I am measuring delta per market, and I'm compiling that information, and this is a measurement of that delta. And the scale for that line is over here on the right, and it can go, you know, 15,000 to minus 15,000, whatever. And then the blue, or the teal-colored line, and the gold, thicker lines here, those are just fast and slow-moving averages of that delta. So the MA1 is a fast-moving average, and the gold one, MA2, is a slower-moving average. And when they cross, you can be bullish to the upside, and they cross down bearish. And it's not only a directional component of the delta, but I also look at the accumulation of it, and whether it's positive accumulation, the overall day, are we having a growth in our delta? Is there an underlying current to the upside, or is it negative accumulation? Is it a downside overall position on the market? So that's the lines. We actually track the delta. One thing that we do that's really different and a little kooky is we even take a different look on that delta, and this other histogram looking rotation thing you see here that you probably are saying looks a lot like a MACD. Well, it is. It's a MACD. But it's not a MACD. It's not a moving average convergence and divergence of the price action. It's a moving average convergence and divergence of this skinny, jaggedy, orange delta line. So you're asking yourself, why would I do that? And I'll answer very quickly. It gives me a short-term measurement of the momentum of the delta. So I can look at this delta cross indicator, and when it crosses to the upside, I know that I have a position. I have the underlying battle. I have the bid and the ask battle going on, the bulls versus the bear. I have the bulls winning when we're crossed to the upside and climbing. And price action should follow that battle. And then this histogram tells me when that battle's taken some blows. Okay, so think of it as Rocky. Okay, many of you watched the movie Rocky back in the day, and you know, what was his name, Clubber Lane or whatever. He's winning the fight. He's going, but you see Rocky start fighting back, and then eventually the tide shifts. Well, when they might be winning a couple rounds, but within the rounds they're losing part of the battle. That's what this MACD is showing you. So it's showing you, like, as the moving averages here are climbing and the price action's going higher, you see this MACD cross down below the 0 line. So it's telling you, hey, heads up, we may be coming in for a change here, and sure enough, the delta ends up crossing over and then price action follows. So it's a way that we look at very short-term delta pressure. So we track delta from what I call a, kind of a stochastic-looking thing, and then we have a short-term delta measurement. And remember, we have deltas also included in that candle color on a different time frame and scale. So when you put all of this together, I know we're getting confusing here, but I'm going to wrap it up with it. And I'm going to just try to pull you all back in here. And we put it all together, and we have a really, really simplistic, simple-looking chart. I say simplistic and simple, and I know it's not. Nothing in trading is simple. But let's see if we pass the test here when we put it all together. Red lines mean what? Just tell me bullish or bearish. Red lines on the, we're talking about the active fractals. Let's get some participation here so I know everybody's listening, because we have to make sure we get past this to move on. All right, right. Red lines is bearish. All right. Red moving average crossover, is that bullish or bearish? Long or short? Our intermediate term trend. All right. So far, so good. We know red lines mean short. We know crossover means short. Red candlestick colors in general. Red candlestick colors. Red candlestick colors. Right, right, right. And finally, the delta cross. When the delta cross crosses to the downside, we're bearish. So let's just talk about this. So we start getting red fractals. We start getting moving average crossover to the downside. We start getting red candles. We're short. Moving average crossover on this delta down here at the bottom is also crossover. We see the MACD get above this 0 line right here. Not a true MACD, MACD of the delta. What happens? You get a little bit of a bounce in your price. You actually get a reset. That's what we call it. It's a reset. You actually would have a new signal form right here if I had the signal tool turned on. And then the market continues down. So the mid-round, there was a little sway and momentum mid-round here. You got a little climb in price action. But yeah, that is basically it. So looking at this chart, and we're very proud of this, I will tell you, looking at this chart, would you agree that this is a nice, clean-looking chart? There's no time involved here. There's a time axis across the bottom, just to let you know what time of day it is, but it has nothing to do with the candle or bar formation. Those bars are only formed when you get price action movement. So this is tracking true price action swings in a very clean, concise manner, and I've talked you through our trend identification mechanisms. The active fractals, the moving average cross, the short-term candle colors, and the delta cross. That is the basis of everything we do with our fractal swing tool. That is it. Now, everything else is just filters and iterations. All the signals are derived off of this information. Everything comes off of this information. The Renko bars do not disappear. Danny, you must have been a little bit late joining us. That's why I developed these bars. These are offset bars that open at the mid-wrinkle. They're my own designed. We programmed them. They have wicks on them, unlike a regular Renko bar. And no, they don't disappear. That's the beauty of these bars. You only get a bar when the price action moves. You never get the disappearing. You get wicks on the rotations, and we offset the bar. It's called an NTRenko, and you can get this bar for free. Just go over to Newbie-Trader.com, sign up for that newsletter, and I give that bar away for you. There's sites out there that charge about $400 for this bar. You can have it free. I needed it for developing my tool, and I give it to you for spending some time on my site. You can have it.